Hello traders, the title of the video is the Elliott wave monster waves count explained. Elliott wave monster wave count explained. We are about to explain, alright, the Elliott wave monster wave count. And the financial instrument that we are analyzing is Monster Beverage Corporation. Alright, do you drink beers? Do you drink soft drinks? Alright, check out the Monster Beverage Corporation, EPIC MNST, Mike November Sierra Tango. Belongs to the consumer defensive sector. All right, defensive. There was a trader that asked me, by the way. All right, I remember now. So forgive me, a trader did ask me before to record a video about defensive stocks. All right. My apology to that trader. All right, so I will note it down one more time. I just remember, I think it's Topper, one of our #1, okay, YouTube fan, okay, defensive stocks. So I will get back to that, okay, in the near future. All right. So we want to explain. So let's talk like a friend. All right. So some of you hate me so much. Some of you love me so much. Some of you do not know what to think of me with my funny accent. I understand that. Okay. So the point I want to make today is that before we continue very fast, we will be talking about Elliott wave strategy, how to count wave, how to avoid Elliott wave count. So stay with us, please. All right. So, but before we continue, I want to say to trader that I take all the comments seriously because there is a group of traders, Elliott wave traders, that want me to record short form videos. All right. Now, by going into the mind of those traders, I understand that those traders are more advanced Elliott wave traders. So when I'm spending time to go a little bit deeper and deeper, or if I'm trying to help new traders, those traders are a little bit irritated. They say, George, I understand it. What are you talking about? I understand it. Move on, please. All right. So I will be recording short form videos sometime, all right, to please those type of traders which are more advanced Elliott wave traders. But yesterday I did, all right, see one comment, and this is what I'm talking about. A trader did post in the comment section that he likes the long form video because it's helping him to understand more the Elliott wave theory, that I should stick to the long form video. I also noticed that some traders mark some video down because of the short form video. Those are the traders that are beginners that want us to dwell on some of the subject to talk about it more. So the reason why I'm speaking at this is to be a little bit democratic on YouTube, because YouTube is the most democratic platform, and I'm trying my best to please everybody. All right, so if, for instance, all right, I record a long form video, which will happen because some video will be very long, 1 hour, even more. All right, if that is the case, all right, don't mark it down because it's a long form video. Just understand that, all right, George is speaking to the broader audience. Broader audience means beginners, people who do not know anything about Elliott wave, want to get on the ladder of Elliott wave theory. I'm speaking and I will be repeating myself so those traders do not have to replay the video, but I'll just go over the subject so they understand everything clearly and neatly. All right. But sometimes if you are a beginner and you see that I record a very short form video, which I've been doing recently, all right, don't get upset. All right, your turn also will come. All right. So this is one thing I want to describe before we continue. There is another group of traders, all right? I forget those traders. Now, anytime I record a video about Elliott wave count, we need to talk about it before we continue this discussion. So if you are in a hurry, you can move forward the video. Okay, you can push the arrow very fast and start watching it from where. If you're not interested in this subject, what I'm saying now, you can move and watch the video further down the line. Okay. Now, there is another group of traders, all right? Now, those traders are looking for educational Elliott wave videos. So, for instance, if I'm talking about WSY wave pattern, those traders love it because maybe it's something new for them. something they want to understand. This is what I call educational video that those traders want to understand. So anytime I record a video, all right, and I count wave, those traders do not find it interesting. They say, George, I don't want to know about wave counts, all right? I don't want you to watch videos where you are counting wave, because I don't first, I do not trade that stock, I do not trade that currency. All I do care about is educational video that will explain to me, all right, the Elliott wave principle. Again, for those traders that want educational video, don't mark the video down because I'm counting wave or the video is about Elliott wave count. Because again, in order to be democratic, there's another group of traders, because I try to understand every type of trader that are watching our video. There's another group of traders that use our video to help their own wave count. Those are active traders, professional traders. Some of them, you may be surprised, are watching our video and want to make decisions correctly. So they will use my wave count and compare it to their own wave count and make practical decision, real-time decision. So for those traders, I will be recording, okay, wave count video. So you may not think that, Joel, I don't want you to record video about wave count, but understand that there is a group of traders out there that are following us. All they do, they watch the video, all right, and they make a practical decision. Some of those traders are also belong to the group of advanced traders. So they want the video to be short because they want to watch it fast and then compare it to their own wave count and make a practical decision. So this is what's going on at the 24 Elliott Wave YouTube channel. And before I start again, because this one is about wave count, all right, so you want to know who George is speaking to, all right, and know what is going on this channel, all right. So let's begin the demonstration, okay, talking about, okay, Elliott wave, monster wave count, explain. All right. So I have recorded a video before using, okay, the Monster Beverage Corporation. And my wave count that time was on a monthly chart. We were using a reference point 2009. And I was telling traders that we have first wave, all right, up to this point, second wave right there. Pay attention to the red numbers. And then we say this is the third Elliott wave, and we call this one the fourth Elliott wave. And I was expecting traders to expect the fifth wave in red. You remember that on the monthly chart? So we did talk about monster wave count, monster beverage, whatever. There's a video like that. But today what we're going to do, we're going to combine, okay, a higher degree wave count and look at our wave count and explain to traders more what to expect, all right? Another thing I want to point out recently, I recorded a video about how to use the Elliott wave to pinpoint the multi-wave. So again here, so what usually takes place, we need to talk about it in a public place, is that a trader, an Elliott wave trader, may watch a video for the first time or may come across an Elliott wave strategy. So recently, as I mentioned that strategy about using the RSI peak, most importantly on a monthly chart, as I told you, on other time frame, it may not be solid as it is on the monthly chart. So I need to mention this again. But we are looking for RSI significant high. So this has something to do with what I'm about to explain to you here. You can see here for Monster Beverage Corporation, all right, there was this significant high here. Can you see that? I'm drawing my line there. And it was which year? All right, 2006. All right, 2006, the market was overbought. And people were saying that the market will crash, But it did not crash in 2006. It did come down in 2008. The same thing people were saying in 2016, that the market will come down, Maybe the market will come down in 2018. So the sign is here. RSI period 14 exhibit a significant high. Three things are possible. Either at that point in time in 2006, we see a reversal, price pull back a bit. That's the first thing we are expecting. If the price pull back and start going up, that move up is likely to become a trend. A trend can fail, all right? So if a trend fails, we may call it X, or it may form the V wave of a flat correction here. That trend, that pullback was followed by you see pullback significant high. We'll be expecting a new trend, but it's not a trend because the market has stopped. The S&P 500, that's what we are talking about. We are trading first the market. So instead of having a new trend, we have or the third wave of a higher degree here. We have a flat correction. This is the B wave of the flat correction, followed by the C wave of the flat correction. So we have a trending first, a flat correction, okay, and now we have a multi-wave in place again, which is forming the third wave of a higher degree. But the point I'm making here about the RSI is that, again, here it was useful for us to know that possibility that the price may pull back, reversal, or if it continues to go up from here, we will just follow the price action. So we see a pullback, good. If the price starts changing direction, we'll expect a new trend. Here, there was no trend. It may form X, it may form a B wave of a flat correction. The trend may fail, depending on the market environment. Okay, talking about the S&P 500 itself, all right? Here again, look carefully, my friend. You may say, Joe, you're talking too much today. I like to talk, and it's good to talk. Look again here, we have again the RSI again at that significant high. Okay, the same level, all right? Here it is, all right? Same zone. So here again, if I move by your vertical line to that point, you'll see carefully, which year was that? Okay, which year? That's 2012. For the same stock, as I told you, we are using historic data of the RSI peak. It has peak here, 2006. Here again, 2012, we have the same peak, significant peak. I need to mention today, I did use the word significant peak. All right, so check out that video again. All right. So here again, we'll expect either a pullback or a continuation. And the third thing that we'll be expecting is that after the pullback, if the price starts going up from here, we'll expect a trend. So understand, when we use the word trend for us area we traded, we can talk about, so we can refer a trend to an impulse wave, which means it can be subdivided. The new move that is starting can be subdivided into 5. This is about impulse wave. We can also use the word multi-wave. Again, we are talking about first wave, second wave, third wave, fourth wave, and the fifth wave can follow this change, this reversal point. All right, again, all right, here it is. So here after this pullback, price start going down, we say probably the price will print 1, 2, 3, 4, 5 move up. It may be an impulse wave, fully fledged short-term impulse wave, or medium-term impulse wave, or long-term impulse wave. Long-term impulse wave will refer to a trend that has been in place for some time, or medium-term impulse wave may be a trend that has lasted few months, and so on. You see? So this is what has happened here again. The RSI has been quite useful here. So now, we are expecting a fifth wave right here. So we are talking about the area wave, monster wave count explained. So this video is not a short form video when I'm trying to explain more what's going on here. We will be expecting, you see here, so we have first time, you see, first wave of a higher degree. I'll talk about it, all right? And this is the second wave of a higher degree in black, ending here, all right? And the third wave of a higher degree is not yet finished. It shall go up a little bit more. I'll be talking about this soon. Followed by the fourth wave of a higher degree and the fifth wave of a higher degree going up more. Because I don't have room, that's why I leave it there. I should go up more. I'm talking about the higher degree wave count. You can see that the RSI period 14 did exhibit a significant high at the top of the first wave. Now, it's alerting us that after a pullback or after a correction, if the price did not continue, if it did not continue to go up here, we are likely to see an impulse wave. That significant high here was signaling the beginning of the third wave of a higher degree. Now look again, here we have another significant high. You see? Why? Because this is a first wave, the first minor wave, all right, the first minor wave of the third wave of a higher degree. So here, first wave of a higher degree, the RSI exhibits significant high. First minor wave of the third wave of a higher degree, we have again a significant high. There is a high chance that when we are in a fifth wave, this RSI period 14 may come back again to the same zone of 100 to exhibit a new significant high. Now again, when we see that, we will expect what? The first thing we will expect is what? A reversal. Doesn't mean a reversal will take place by all means, but we just know that it's possible. All right? Or primary extension, wave extension can be prolonged, which means it breaks above the resistance that the other side is pointing to us and continue to go up. Extension. All right? All right? Or if there is a pullback, which will be in this case, because we are talking about higher degree wave count, fifth wave, if you exhibit that, we'll expect a correction, and after that correction, we'll be expecting a new multi-wave or a new trend, or the correction may be prolonged if the new trend has failed. How long have I been talking to you now? 15 minutes. All right. Okay, now let's go back now to the Elliott wave count itself, all right? So I told you, first wave of a higher degree, second wave of a higher degree in black, third wave of a higher degree in black is not finished yet, so we are expecting the fifth minor wave of the third wave of a higher degree. This is the first minor wave in red of the third wave of a higher degree. This is the second minor wave of the third wave of a higher degree, and this is the third minor wave of the third wave of a higher degree in red, and this is the fourth minor wave of the third wave of a higher degree. I need to remind traders that in this case we have an A, B, C, D, E correction here. Can you see that? But it's not in the shape of a triangle. You can see price came down. So our here 1, 2, 3, 4, 5. A, B, C, D, E. Now, is it in a triangle? No, it's not in a triangle as such. It's a consolidation. So the corrective wave, or the A, B, C, D, E, is a triangle. Normally, it's a triangle. Here it is in a horizontal, okay, channel. It is possible to see that because we are talking about correction. Correction, either consolidation, normal consolidation, or a triangle. And the area wave traders that have recognized that, so at this point, people will be expecting a bounce up, but the price may continue to oscillate. Here, it managed to come out of the consolidation zone, and we are expecting, okay, the fifth minor wave of the third wave of a higher degree. So that's the red 5 here, which is the fifth minor wave of the third wave itself, and the third wave itself will end somewhere here. But because I do not have enough room, that's why I put the numbers here. But the correct ending place of that fifth wave, of that fifth minor wave of the third wave of a higher degree is by using, okay, the width of this consolidation here and project it above, which is bringing us to uncharted territory on my screen here, because you cannot see, but that's what you need to do. You measure that width and you project it on top of it, all right? And so that fifth minor wave of the third wave of a higher degree should go up beyond my screen here, up there, all right? So when that fifth minor wave of the third wave of a higher degree is completed, we'll expect the price to pull back, forming the fourth wave of a higher degree. We'll expect it either that fourth wave of a higher degree to stop, maybe the first scenario, it can stop on top of the consolidation. The best place is to come back inside the rectangle here to hit the median line of that rectangle. That will be a better place in my view. The median line of that rectangle. So when that fifth minor wave of the third wave of a higher degree is completed up somewhere there, pull back to form the fourth wave of a higher degree, followed by the fifth wave of a higher degree. Now, what we will say to traders that are looking for educational material is that you see this, because the third wave of a higher degree has been prolonged for some time. Can you see that? It has been extended too long, you see? All right? So when a fifth wave is underway, we can use either the length or the magnitude of the first wave of a higher degree to forecast the end of that fifth wave of a higher degree. So you measure from the top of the first wave of a higher degree to the low of the first wave of a higher degree. All right, that's the magnitude, and you will project it right here. You can see, oh, is my measuring still good? Oh, it's this, yeah. Project it up we project it from the point of the low of the fourth wave of a higher degree. It doesn't make any sense here. You see, it's too short. So I'll discount that straight away. Or we can use, okay, the length of the first wave of a higher degree. And if the fifth wave is underway, we project it again. You can see it's quite short. So there is a high chance, practically speaking, that our fifth wave of a higher degree will go up more than we are forecasting it. All right. Is it clear enough for you? Does it make sense? All right. So here we use the market geometry to forecast the end of the fifth Mano wave, of the fifth Mano wave, of the third wave of a higher degree. So this company, you see that this is a bullish cow. So from, in fact, I would say from 2000, call it from 2009, because that's where the S&P 500 began the bullish trend from 2009 up to now. Monster beverage was just going up. So it went up, in fact, if I use a conservative measuring point, it went up from $5 in 2009, $5.48, and here it is now at $56.45. Look at that. But the RSI did a very good job. You remember what I said to you before, that we can use this RSI peak to catch the beginning of the multi-wave. Now, it's not easy as such. This is a beautiful scenario because the RSI has peak, all right? So we, at this point in time, will say, all right, George said three things. Either we see a reversal, okay? And after the reversal, if the price are going down, we'll expect a trend, all right? Or that trend can fail. It may form the B wave of the flag correction or X wave, and so on, okay? But if the price breaks above that resistance, we follow the price, expecting an extension, all right, of the move that has started first. So if you were here, the first reaction is a pullback. So here you will be, after price start going up here, you'll be expecting a multi-wave. It did not happen. Here the mistake, now it's normal to expect it to go up, all right? After the significant high, common settlement is pulled, it's okay to expect that. But you can see that it just went up a bit. So in order to catch the trend, you want to pay attention to the market environment. S&P 500, the market environment, blah, 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 the fundamentals, economy news, and so on. Market environment. So finally, the S&P 500 itself, due to the Federal Reserve decision, all right, to reverse their policy of quantitative easing, the market environment was now ready for this stock to start going up. But the RSI did give us a warning to expect after a pullback. The pullback was short, but the correction was not finished, you see. So in fact, we can see that when RSI peak like this, we can expect a corrective wave. It can be an expanded flat correction, can be a zigzag, can be a pullback, and so on. So we can say RSI peak, expect a corrective wave. That's the first thing to expect. Second thing you expect, if the corrective move is completed, expect a multi-wave. Now, if the RSI peak by the price breaks above the resistance, we'll expect an extension. So you can think that way, all right? So finally, the market environment was ready in 2009. As the RSI has indicated to us here, look at that. We expect an impulse wave. That impulse wave is the third wave of a higher degree. Probably before we see the beginning of the fifth wave here, the RSI may come back again here, indicating to us another impulse wave, indicating to us the possibility, or maybe here it may reach that level by the end of that third wave of a higher degree. It may peak again. We will see. It may not. It may. All right. We will see. All right. So take away. All right. A, B, C, D, E. Not always in a triangle. Most important, as I told today, is a correction. Is it a corrective wave or is it an impulse wave? That's the most important thing if you want to simplify the Elliott wave count. Yes, it is a correction. A professional knew that, bringing it up now. So now, in all cases, traders who are trading it will see prior to bullish signal, above $54, okay, above $54, all right, prior to bullish signal, use a top-down trading method. If the signal fails, just come out, all right, project the width of that channel at this point in time and take it out. So the ultimate target is here, is by using the width, but there is also a midpoint target. So where is that midpoint target? That's dividing the channel into half. You want to know where is the midpoint target? Here it is, my friend. All right. So this video is switchable for traders that are using our video to compare my wave count to their wave count. So those are active Elliott wave traders. So you will see sometimes one trader will mark the video down. The next instant we see another trader marking it up. So try to think of other group of traders that are watching our video, and don't get upset sometimes if the video is too long or I dwell on one particular subject. I'm thinking of educational traders that are looking for educational video. I'm thinking of more advanced traders that are using our video also, all right? And some video will be short, some video will be long, some video will be medium, all right? So after the flag correction, after the fifth wave is completed, we'll come back again and look at this and talk about another monster beverage, Elliott wave count. In that video again, I will be showing trader, we'll be talking about the corrective way, how you'll be developing. So looking at this talk, it looks to me that we need to be careful talking about the S&P 500 and all the major indices. Correction may begin in 2018. We will see. All right. So if you have any question or suggestion, or you want to add something about my blah 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 at the beginning of this video, let us know. All right, so this is it. If you have any question or suggestion, put in the comment section. All right, I always read them, and in due course I'll record another video, all right, to answer your specific question. If this video has been truly useful to you, let us know by giving us the thumbs up. If you think that is another blah blah blah, you can mark it down. Okay. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So this will conclude our discussion today about the Elliott wave, monster waves count, explain. Happy trading to you all, and I will speak to you soon. Thank you for watching.